Hello and welcome back to Bhavani JIB. Today we are talking about retail banking, especially made for Indian bank employees aiming to crack JIIB. Today we are going to explore retail banking basics together. In our journey through Paper 4 Module A, we start with the third unit, which is called the role within the bank operations. Retail banking as a business model is adopted by all the banks in India, irrespective of public or private sector. We are going to learn about the various business process structure, process models, business approaches, product development, pricing of products, technology models, and business models of the future. First, we will be talking about the applicability of retail banking concepts, under which we'll be focusing on the implementation model. The most common strategies used are the in-house sourcing, outsourcing, and partial outsourcing. So, what do you mean by in-house? In-house means within the bank or internal instead of giving it to a third party. Most of the public sector banks use only in-house resources for retail banking. For example, all debit card and credit card related activities are done by the bank itself without depending on an external party. Then, what do you mean by outsourcing? It is the opposite of in house sourcing. It means that the bank activities are being given to a third party or it is external. For example, all bank related activities like deposits, loans, cards are outsourced completely. Outsourcing is usually done by the foreign banks. It gives all its tasks to a third party instead of doing it by itself. There is also something called as the partial outsourcing. Partial outsourcing is usually done by the old private sector banks where they will give the front end activities. So, what do you mean by front end? The people who are representing banks sitting in the branches, those activities are given to the in house, while back end, that is the Department of Technology Management or Business Solution, they are being outsourced. So, this is regarding the implementation model under the applicability of retail banking concepts. Here we have spoken about the in-house sourcing, outsourcing, and partial outsourcing. Next, we will be moving to the business process structure in retail banking. Here it is divided into vertically organized model, horizontally organized model, and predominantly vertically and horizontally organized model. We look into each one of it in detail. What do you mean by vertical model? Imagine there is a big building with different floors. Each floor has its own boss and team, and they all work together to take care of different aspects of your money. It's a bit like an organized tower where everyone has their own job to do and they follow the rules set by the big boss at the top. Here, we will also learn something called a predominantly vertically organized model. Here, what happens is the common customer information is available to most of the products, which will enable us to do cross selling and upselling. So, what do you mean by cross selling and upselling? We'll be looking at it in the next chapters. Next is the horizontal model. It's like having a team with different people with different skills. One might be good at deposit loans, and one might be good at handling cash. The bank organizes small groups that have different skills. So all these people come together and form a small group led by one boss. Here, end-to-end solution product-wise is available. Here we also learn something called the predominantly horizontal structure, which is quite opposite to what we have learned here. Here, the common customer information is available only to some products, and it might not be possible for us to do cross selling and upselling. So, here we are clear about the vertically organized model and the horizontally organized model, and the predominantly vertical and horizontally organized model. Next, we'll be talking about the business approach. Here we have three approaches: segmented, geography, and classification based approach. What do you mean by segmented approach? Segmented approach, branches are classified as resource centers, profit centers, and priority centers. So, what do you mean by a resource center? A resource center in retail banking is a centralized hub or area that provides customers with information, assistance, and resources related to the banking needs. Profit centers, from the word profit, we come to know that we are only focused on getting profits to the banks. Priority centers, they involve providing premium services to the high net worth individuals. Next, we'll move to the geography based approach. Just by looking at the diagram, we come to know that the retail models differ based on the place where the bank is located. For example, if the bank is located in an industrial area like the Steel Authority of India, the bank will be able to give loans like personal loans. And if suppose the bank is located in an education institution like the IITs, IIMs, NITs, triple IITs, mostly the loans that you will be able to give will be education loans. And this can also be seen in a very larger perspective, like in Tamil Nadu, gives very high importance to gold loan, especially for the marriages. So here you will be able to take gold loans from the people. So similarly, we have something called the classification based approach, which is more or less like the geography based approach. But here the branches are divided into branches present in semi-rural, urban areas, and metro. Here we can see in these pictures. So mostly in rural areas, what happens? We'll be able to give agriculture loans, KCCS, and agriculture-based gold loans. And similarly, in urban or metro cities, we'll be able to give more of digital-based products because people are more digitalized in the urban and the metro cities. So here we are clear with the segmented approach, geography-based approach, and classification-based approach under the business approach. Next, we will be learning the product models in retail banking. See, retail banking is a process of selling multiple retail banking products or services to multiple customers through multiple channels of distribution to earn a profit. So, profit is our main motto. So we are looking at the balance sheet of the bank, which I already told is like the Bible of the bank. So here we have the asset side and the liability side. So on the asset side, the consumer loans are presumed to be lower in risk. We have already spoken in the previous retail banking chapters that retail banking products are always low risk. So economic revival of the nation through increased production activity. So if at all we are giving the loans to the small scale industries or small corporations or even individuals, in turn, it leads to the development of the economy, and in turn, it leads to the development of the nation. There is also increased or upgradation of lifestyle of the middle class, and it also fulfills the aspirations of the people. Next, we move to the liability products. Here, the main three products offered on the liability side is the savings account, current account, and term deposits. As you all know, we can here nobody is interested in the simple plain vanilla accounts, right? So simple plain vanilla account means a basic savings bank account which comes with ATM card, credit card, and multi-city checks. That is plain vanilla, and it is not enriched with something like a nice butterscotch or strawberry. So these kind of accounts are not what people are seeing nowadays. On the other hand, providing a value extension, a value enriched account, something like you're providing internet banking and mobile banking, or you're providing some accident insurance or an investment come insurance policy. This attracts the customer. For example, some banks have a current account in which auto OD is a part of the package. How nice that would be, right? So this is about the product models in which we spoke about the assets side of the balance sheet and the liability side of the balance sheet. Next up, we'll be learning about the product development in retail banking. Here we are focusing on the process models for products and services. This slide, I think we have already seen in the applicability of retail banking concepts, where we spoke about the in-house, outsource, and partial outsourcing. Basically, services in retail banking are approached in three dimensions. One is entire process is done through in-housing, and in some process part of it is done in the partially outsourcing, and some are completely outsourced. In all private banks or public sector banks, the entire processing is done through in-house sources. But in new generation private sector banks, partial outsourcing is carried out. But usually, if you can see, processing of any particular product is not completely outsourced for safety reasons. But in foreign banks, the entire process is outsourced and normally happens in a dedicated back office. Here, we should also learn something called the centralized retail assets. So, centralized retail assets is wherein some of the retail loans, education loans, vehicle loans, and especially the four-wheelers loans will be given to the retail asset hubs. The we are just sourcing it, and we are just handing over the processing part to the retail asset hubs. There is one more, which is quite opposite to what the centralized retail asset is, that the whole processing of all loans will be done only by the branches in what is called as the standalone branches. So here we spoke about the in-house, the processing happening in only in-house, in only outsourced, or it is partially in-house and outsourced. And also we have learned about the centralized retail assets processing centers and the standalone processing centers at banks. Next, we'll be learning about the pricing of products and services. So before we learn about all these things, we need to know what do you mean by market dynamics, risk perception, expected returns, tenure, and asset liability management. Because all these factors are responsible for pricing of any product. So what do you mean by market dynamics? Market dynamics refers to the forces and factors that influence the behavior of a market, including the buying and selling activities of buyers and sellers. Risk perception refers to how individuals perceive and interpret the potential risks associated with various activities, decisions, or situations. Tenure. Tenure is the time or the duration of the product in the market. Suppose a 444-day FD is released in the market, how long will it stay? Then we have the expected returns, which talks about what kind of returns are you expecting and how long will it take. There is something called as the asset liability management, which is a very huge topic as such, but we will be talking only in respect of pricing of products in retail banking. The primary goal of asset liability management is to ensure that the institution's assets and liabilities are aligned in a way that minimizes risk and maximizes profitability. So, pricing of any product or service is based on all these factors which we have just spoken about. Next, we'll be learning about the technology models in retail banking. It all started with something called the ALPMS, which is also called as the automated ledger posting machine. I'm sure you guys have not seen this, but these were present before the CBS came in. Okay. This led to a total branch automation. And after re-engineering of this, we got something called as the core banking solution, which we are right now operating. So what happened in CBS is all customer accounts are in a single platform, and there's an increase in the availability of the customer database. So this is about the technology models in retail banking. First was the ALPMS, then total branch automation, then CBS, and because of CBS, we have a higher customer database. I think we are clear about this so far. Next, we'll be learning about the sustainable retail banking, which is also called as the business model of the future. Here, there are two approaches. First is the customer centric approach. You can make out from this image that the customer is the center of the whole bank, where he is being provided with all the different products, starting from the broad non-banking products like insurance, etc., to the banking products like our savings bank accounts, current bank accounts, fixed deposit, etc. The next one is the value chain oriented bank, which operates in three ways. One concentrates on the products for the end users or the end customers. The other two focuses on the process. They sometimes position themselves like a utility bank. So, what do you mean by utility bank? Utility bank is something that is doing banking, but not the core banking. It includes undertaking foreign exchange transactions, providing safe custody of valuables, issuing letter of credit, which we also call as LC, to promote the foreign trade. So here we have learnt about the customer centric approach and the value chain based approach. So far, what have we learned? So we have spoken about the applicability of retail banking, and we have spoken about the business process structure, which includes the horizontal and vertically organized model. And then we have the business approach in retail banking, where we spoke about the segmented geography based approach, etc. Product models in retail banking, where we spoke about the asset and the liability side of the retail banking. We also learned the product development in retail banking, which include the in-house and outsourcing of processes. And also we learned about the factors that led to the pricing of products. And we also learned in the last the technology models and the business models of the future. Also, guys, please check the description for mock tests and check your progress. Don't forget to subscribe for more insights into the world of banking. Stay tuned, stay informed, and keep banking the Bhavani JIB way. Thank you. And next up, we will be learning the applicability of retail banking concepts, the branch profitability. Until next time, happy banking.